Hello everyone and welcome back. My name is Greg Furman and this is the Forex Weekly Outlook for the week of December the 10th, 2018. Now, to get started this week, we're going to begin where we always do with the very important US dollar index. Now, what we can assess here with the dollar, we're coming off the non-farm payroll number. Not a horrible number, but not a good one either. So a lot of talk right now whether the US is going into recession or not, based around comments from the Fed, etc. I don't feel the US is going into recession, but the rest of the globe very well could be. So global demand is going to probably start to slow. All of these things are likely to add up and hurt the dollar. Now, we've also got political issues with the US, a number of different things here. But our critical level, we've closed below 96.19. We're closing out the week at 95.94. Quite bearish, but when we look at this over a longer period of time, over a 9-month period of time, or even a 6-month period of time for that matter, we can see that we have significant resistance up here around the 97.20, 97.50 area, this area that I've basically been talking about for the last several weeks now. Seems like I've been talking about it forever. But again, a fresh sell signal, our medium term crossing our long predicted difference down. Predicted RSI breaking down below 40, so most indicators here are pointing towards further dollar weakness. Now, not surprisingly, I've been banging the gong here, I think forever, on gold, that it is getting ready to make a break higher. Now, we're pushing into our verified support zone, but where we want to look at this is on the 6-month time frame, is where it gets very interesting. I believe we are going to be heading back towards this 1300 mark. We're on the move here now, but again, we're a little bit overbought. Now, just because something is overbought or oversold doesn't mean it can't continue to go up or down. In this particular case, fundamentals are a driver for gold in the flight to safety as equities come under pressure yet again. This is fueling the gold rally. Now, our critical level for next week, 1235.20. We want to make sure we're holding above that level this week. We do have the Powell statement. I believe he's going to speak on Wednesday. Nothing major, but everybody's watching his rhetoric very, very closely. But right now, gold clearly is a heavy bias to the upside. Now, with gold moving higher, not surprisingly, stocks are basically all moving lower. Now, when we look at our critical vantage point level, 2710, this is one level, guys, but the big level here, you can see these 3 large arrows that are right across the screen. That the first one is very recent, just from the other week, this past week. Again, we're coming up to this 27.9, approximately the 28.13 area, and we're failing, but you can see that this is the 3rd time that this has happened. Now, if from a technical standpoint, this suggests that we are in a bear market here. Now, my opinion on that would change only on a sustained break of, say, 28.20, 28.25. But even then, we're dealing with significant resistance up at this 29.44 area. But this 3 level, this triple top that is formed around 28.20 is a major concern. Now, oil has started to turn around a little bit this week, but again, when we look at this, we are simply unable to break through that critical vantage point pivot area, now 54.76. When we look at our long predicted here, we were trying, as I had talked about in last week's Forex Weekly Outlook, that I felt there was going to be a short squeeze on oil, maybe pushing oil a little bit higher. But even with OPEC cutting production, I don't think that's going to really help oil that much at this particular time of year, because supply is still high and demand is still relatively low. But now we're going to be going strictly on supply and demand fundamentals. So not overly bullish on oil, but there is a very small buy signal. But that is it here, guys. Not a big one at all. And if equities turn lower, if we are entering into a bear market on most of our stocks here, then oil is likely to follow. Now, As we come into our main Forex pair, Euro US is again playing inside this range that I've talked about, basically right now between 115 and about the 112 area. A very soft buy signal here, but always dangerous up against these verified resistance zones, even though our main indicators are bullish. Now, in my respectful opinion, look at intermarket correlations. If gold continues to move higher, the euro is likely to follow. That is the play that we look for. Now, on our downside support areas to buy from, 1360 is a big number this coming week. That is the critical level that we want to watch. If we can continue to hold above that level, guys, then we've got a real shot of pushing back up above this 115, maybe even the 116 area. But again, liquidity is going to start to dry up in the markets in or about a week or week and a half. Now, US Swiss franc, once again, in the live training room, we've been shorting this, only basically shorting this one, but potentially a bigger short is coming, but it needs the stocks to be moving lower, bottom line. Critical pivot area where I like shorts, 99.57, but stops must be above 102 here, guys. We don't want to be getting stopped out anywhere near these verified resistance zones. That is very, very critical here, guys. Our indicators are still turning and pointing down, so it looks like we're still going to move lower, but watch the stocks here. Okay, if stocks can, if I'm correct and we're moving into a bear market on the equity markets, or even if we're just continuing to play the same range on stocks between the 2600 mark and say 2820, then that still keeps us on the short side of this particular trade. Basically, selling rallies has worked very, very well this year, guys. When we look at this, even over the last 6 months, we have not been able to break through this area near 102. Every time it moves higher, we try and use that to set our shorts. The predominant way of making money in these types of markets is not by following the trend here, guys. It's by selling into strength and buying into weakness. We just have to be careful where we're doing that. That's the key thing. So this particular pair, we can see massive resistance building now, again around 99.70. So again, shorts still the better play in my respectful opinion. When we look at British pound, US dollar going into next week, I'm going to tell you guys the same thing that I say to my own direct clients here, and this is a pair we don't want to bother with this one, guys, until at least Wednesday. And the reason I'm saying that is we've got a vote on Brexit on Tuesday night. I don't think it's going through, even though I'm a strong supporter of Brexit. I think the UK is making the right decision by breaking away from the European Union. But again, we need that vote to see if it's going to pass through the UK Parliament. I don't think it's going to. I could see us going to no confidence vote on Theresa May's party, on her in general. We'll see about this, but let's get past Tuesday. Right now, there's both good longs and shorts on this particular pair. Selling into the VantagePoint critical level at 128.02. But buying that critical support level that I've talked about at 126.60 is also working. So we've got a real tight market right now, but we can see that again right now 126.66, where this first verified zone has formed. This is a very long-term bottom here, guys. This has been in play for, believe it or not, almost 4 months. So when we bring this chart out to our 6-month time frame, you can see it right there. And that low is again 126.65, the August 15th low, and we're connecting it to the December 4th low. Lots of buyers repeatedly when we've come into this area. In my respectful opinion, pound dollar will be a fantastic long trade in 2019, just like it actually has been a pretty decent long trade in 2018. We just have to get past this Brexit. Now, with dollar yen next week, still very, very bearish, as these verified zones up here are just vicious. They're relentless. Every time the market tries to break out above 114.50, these verified zones hold, and the sellers come in and they basically take over from the bulls. The bulls continually throw the towel in around 114.50. Very little has changed. Do we have support down here? Yes, of course we do. Heavy support sitting at 112.30. It's holding for now, But again, if those equity markets tank here, guys, dollar, yen, and US Swiss franc are going to follow in a risk-off scenario. Now, our key pivot area for this week, 113.25, that's still an area to attempt shorts as long as we're holding below this level. Now, on our three main commodity currencies, starting with US CAD, this is one that's a little tricky for the average trader. Now, we're entering into this verified resistance zone around 133.85. We broke through that on the Bank of Canada because the Bank of Canada didn't hike and they became very dovish. US Canada then was pounded lower on that far better than expected jobs number out of Canada and the weaker jobs number out of the US. However, guys, we held the 132.60 area. Longs basically are still viable. Think of it this way. Unemployment report is a lagging indicator. We're looking backwards to see those numbers, but the Bank of Canada is looking forward, saying everything they do from now on is going to be data dependent. The 94,000 jobs that were created in Canada were largely in the service sector. These same companies that hired in November will lay off in January. The number is, in my opinion, again, is just a seasonality where they're hiring Christmas workers, promising them full-time, then laying them off January 5th. So, and remember, the 94,000 is still a survey number. They can upgrade that, downgrade that next month, which I'm sure that number will be downgraded. So once again, US-Canada's price action will be dictated by a risk-off scenario and oil prices. So if oil prices continue to move lower, fail up around this $55 per barrel mark, then US-Canada will hold 132.60 and we will move higher. But again, very dependent on a risk-off, risk-on, risk-off environment and the price of oil. Now, with Aussie US and New Zealand US, they will indirectly follow the US CAD and the inverse correlation there. The Aussie is a commodity currency, as is New Zealand. Now, these pairs may get a boost from gold prices moving higher, but equity markets moving lower hurts them. So right now, the critical level, 72.57. The Aussie and New Zealand were very, very strong currencies in the month of November. Two of the strongest currencies, actually. Right now, they're two of the weakest, but this could be a corrective move. We're going to monitor this one very closely. But if stocks do turn around and stay within the range between 2,600 and 2,820, then this pair will turn around and move higher. But if stocks plummet, so will Aussie US. So watch this 72.57 area very closely. And on New Zealand US, we want to watch, again, we're holding above 68.34, but a break of that level, if the stocks crash, could trigger a move lower. We can see here that the medium term crossing the long predicted difference, our MACD, RSI, they're all pointing lower, suggesting New Zealand is going to move lower, indirectly confirming that stocks are going to remain under pressure. So a very busy week next week, to say the least. But again, still some decent trading for about another week or so. That's about it as we move towards year end. So with that said, this is the Forex Weekly Outlook for the week of December the 10th, 2018.